Well, welcome back. It's good to see you all again. Kicking off our first panel, before we do, I think the kind of talking to what I was talking in my presentation there, right, that was the entry scale exit component. And a big conversation is always around exits. How do we get those unicorns, or maybe more appropriately, the 100 million plus companies within the continent? And today's conversation is really about that. What does the next phase of growth look like in African tech? How do we get some more of those growth stage, $100 million plus valuations and potential exits? And the panel we have today are experts in this space. They work across that entire funding and growth continuum from the entry to scale to exit. And our final panelist, who very much looks at the exit side of things, is joining us now. We haven't done introductions yet, so it's okay. So what I'd like to do is have a bit of a conversation today. I've got a question for each of the panelists related to their kind of area of the kind of growth continuum, and then I want to have a bit of an open conversation with them around where they see the next kind of couple years in that growth space, and then hopefully maybe time for one or two questions. But before we do, maybe starting with Oyin on my left, is just a quick introduction to who you are and the kind of role you play in the ecosystem.
Technical issues. Hi everyone, so I'm Oyin Solebo. I am an investor and advisor in the ecosystem. I am COO at an accelerator and catalytic fund called Cascador, and previously I was the managing director for Techstars in Nigeria, so taking the accelerator program onto the African continent.
Hi everyone, my name is Fernando Cabral. I'm the general partner at Djassi Ventures and managing partner at Djassi Africa. We've been building and investing in startups mainly in Lusophone Africa, the countries in Africa that speak Portuguese. We've been working a lot as well with startups in Brazil and the diaspora and startups across Europe and the US.
I think we're all going to share this mic. Hi, good afternoon, everyone. My name is Kinvi. I am the founder of a platform called Borderless, and what we do is build technology for folks like you to come together, invest in Africa. So we enable you to invest across multiple asset classes, startups, real estate, debt. We're hoping to go as low as diaspora bonds, and hopefully many of you can buy the Dangote stocks when they go live soon with us.
Hi, my name is Freda Isingoma. I'm head of AIM Venture Capital Trust at Octopus Investments. If you haven't heard of Octopus, it's the biggest VCs in the UK. The funds I manage are take companies from private to IPO stage. I've been looking at encouraging lots of African tech companies to float on AIM so that they can access UK capital for a while, with Anthony as well. So I'm always willing to hear about the news stories about what's happening on the continent in terms of changing the narrative about investment in Africa.
Amazing, and thank you all for joining me. We can definitely take a lens on the UK. I think that's really appropriate for this conversation today. And I know I had some questions, but the first question I'm going to ask is not a question I actually put down. The title of this panel is, where's the next 100 million African companies will be built? My question is, as investors and ecosystem enablers, are we asking the right question? Is that what we should be looking at, where the next $100 million companies come from? How are you guys seeing, and this is an open question to everybody, what we should be looking at and focusing on right now that gets us to whatever that kind of growth and capacity journey looks like? So a bit of an open question, not what I had prompted you with, but it's come up in my head as you're making introductions. What is the question we should be asking ourselves, and what should we be looking toward as a kind of a starting point for our conversation? Whoever has got a...
Yeah, it's a great question. So I come from having previously focused in VC, investing in tech companies, and now at my role at Cascador, I'm focused a lot more on SMEs, and I kind of... Because of that, I think my view over time has changed. So I think from a VC perspective, we've kind of adopted an American model where many funds take a power law approach. So they say that they're looking for $100 million companies. Hello? Okay. So they're looking for $100 million companies because maybe the assumption is if you do a multiple of 10x, it's a $1 billion company. And therefore, it's okay to invest in 10 companies where only one succeeds because the intention is that one or two will return your portfolio and the other ones perhaps don't matter so much. Whereas I think that now from the seat that I'm sitting, I'm so much more interested in building a larger pipeline of sustainable companies. So maybe they're not $100 million companies, but maybe you're investing in 10 companies and they're all $30 million companies, rather than investing in 10 where you only really expect one to be 100 million and you're not so concerned about the rest. So I think the question that we should be asking is one of building sustainable businesses that can provide quality products and services that can serve loads of customers and can employ loads of people over a prolonged period of time.
So where are the next $10, $30 million companies going to be built, is what we're saying?
Sure. So where I am very interested in the real sector. So I think a lot of the emphasis that we have is in tech companies, but I think we really overlook manufacturing, healthcare, agriculture, education for a certain respect. So these companies that can genuinely provide essential products and services to tens and hundreds of millions of people, those are the kind of companies I'm interested in.
Well, Joe, Hoke, one of the most successful angel syndicates investing in Africa, Borderless, your platform now capacitating more investment. You're particularly seeing that early stage in growth capacity. How would you see it?
My question is, like, who's actually deploying this capital? And when we get the exits, where does the money go to? When you look at the underlying funds on the continent, the money comes from DFIs, and the DFIs sit in the US or Europe. What that means is when we get these exits, I wish they were coming more regularly, the money actually leaves the continent. So we need to figure out how to get more Africans, whether they're in Africa or outside of the continent, to get involved in the successes of the African companies. When you see what happened with Paystack, it's probably the most talked about exit in Africa. That money never actually went to Africa. It went to Visa, it went to Stripe itself, it went to all the big companies that got the opportunity to invest in Paystack. Yes, you've heard the story of some angels, but there are very, very few of them. And if we can get more exit money going to more Africans, we will keep investing. That's my thesis.
So it's not necessarily what is the vehicle for the exit, but more participation from local capitals and investors in whatever that vehicle might be.
Sorry, can I just add?
Yeah.
When in 22-23, when the ZERP era was finally over, all the money just left. And a lot of investors were stuck scrambling, looking for capital. It's really good to see, more recently, a lot of local capital deployment is happening. So Dangote is investing a lot. A lot of HNIs, super wealthy Africans, are investing in Africa, which is a good signal. And we had to see the pullback of DFIs for us to now finally wake up that, hey, we need to invest locally because it really, really matters.
Okay, then we'll get some examples. Let's talk about the next wave of potential exits, right? You've done a lot of investing into a lot of companies with your syndicate. Can you talk to, do we have more participation now? As in, if you say, imagine the next 5 years, we get 2 or 3 exits, have we got the Paystack, not say problem, but is it changed? Are the demographics investing, have they changed, or are you saying they need to change?
I'm with Oyin, which is 100 million exits are great. But can you pay me 20, 30% a year in liquid cash? I like money. Do you all like money? And I like money now, not in 10 years' time. So I think we need to really diversify, look at what Africans need, 4 sectors: food, transport, energy, and housing. The average Nigerian spends 90% of their income on those. Can we invest more there? And these pay really good returns. Should we invest in Nigerian T-bills that are paying 18, 20%? That's real cash in your pocket today. So the angels and the investors that I deal with, they want money today, not in 10 years' time, because they don't have that luxury.
So, okay, then we're almost evolving it even further, because I think the default is when we're here today, we're thinking tech, deep tech companies, and actually, because we're not getting the return off the techs overnight, are we? But you're saying other sectors and industry, so we need to think, reshape what we're investing in as well. Okay, cool. Fernando, I guess this is very niche, because I know you've done great work on the continent, but you've done it in other emerging markets as well in South America. Where are you seeing maybe comparisons, trends? Or we know the likes of Move raised their huge capital round, but that was to go into LATAM and other markets as well. So the growth journeys for a lot of Africa's most successful ventures in the last 3-4 years have not been to double down on the continent. They've been to go to Southeast Asia or other places. So what's your take on that kind of cross-border piece?
Going back to your original question, right? I guess the question is definitely not the $100 million companies. going back to that one, I think that's the bridge that we need to build here is we need to build more sophisticated and resourceful ecosystems around the continent, right? Because here we're talking about having more investors, making sure that the money stays on the continent. And I guess the next big thing or the next question is, how can we build more sophisticated and more resourceful ecosystems on the continent? That way we can really build startups on the continent, make sure that they don't have to leave the continent to raise capital. And to Joe's point, that in that way the money stays on the continent, right? Because the exits will happen there and the ecosystems will become better. I think it's all a question around how we make sure that these ecosystems get better. And one example with that is what's happening in Angola, right? So I'm bringing out the emerging ecosystems, right? Because when we talk about, and the panel is talking about Africa, but Africa, or when we're talking about UK-Africa corridor, it's not only UK-South Africa corridor, it's not only UK-Nigeria corridor. The continent has 54 countries, right? So we need to make sure that the other ecosystems are supported as well. Let me give you an example of what's happening in Angola. We just have a startup, it's called ANDA, A-N-D-A, mobility startup that just raised Q4 2025, 3.5 million, right? It was the first big pre-seed round in the country, and they just raised last week 1.2 million from a local bank in Angola. And they just passed the Startup Act 2 weeks ago in the country. This is just a small example of how we need to make these ecosystems more sophisticated so the startups can grow with local money and they can stay there. And is not looking to come to London and be incorporated in London. Actually, the founder is a former Goldman Sachs analyst, right? He was based in London, but he went back home and he's building his startup back home. So my point is always how we make sure that the local ecosystems in the continent are sophisticated enough, are resourceful enough so the startups can grow and stay there.
And I think that parity is going back to more local investment being made in these companies as well. But if we go the other end of the spectrum, the exit side of things, public sector, public markets or otherwise, we've obviously done a lot of work on this, going to the continent, bringing people here. A lot of that market capital sits offshore to invest, but also there's been a lot of change dynamics between dual listings offshore, and we've even got the Afrotech 50 BTAs over here that have been tracking now those exit opportunities. How do you look at it? We've just had here, we need more local capital investing, more ecosystem building. What role do public markets play? And also just how are you guys perceiving the ecosystem being at the top of that kind of capital chain and looking down what's working, not working, but also what role do you play beyond creating a literal IPO or exit of that nature?
Yeah. I agree with all of the panelists, and I think there needs to be a more foundational system, financial ecosystem that keeps companies on the continent. I know people look at public markets as the later stage sort of funding, but with a lot of the companies that I invest in, sometimes we're their first round of investment. And that's because I invest in AIM, which is seen as a growth market in the UK. So some companies as small as 10 million market cap, 5 million revenue, even some of them 2 million revenue are floating. And I think what would be great to happen in African financial ecosystems is actually a more functional public market that then could partner with other public markets like the UK, and that will help to keep some of the companies on the continent rather than being an incubator for innovation. And I think that's happened in the UK, so we've already seen it happen. The deep pockets are in the US. There's hardly any pension money going into UK companies at the moment. So what happens is London is an incubator for tech. The same is happening on the continent, and the only way to switch that around is to unlock pools of capital. Now, those deep pools of capital in Africa are in the pension and insurance funds. If we can unlock some of that money, we'll start to see DFIs have less of a stronghold or stranglehold on a lot of our funds, never mind the companies themselves. So once we unlock that, then we actually filter money more into secondaries, more into pre-IPO to public market funds, and then you will see a graduate change in how our ecosystem is not only seen locally but globally. And we need to take the power back in terms of having that capital unlocked on the continent. Now, how public markets abroad can help with that, the UK, for example, we could be that interim access to capital for some much smaller companies. So we don't have to look at $100 million companies. Let's start, as you said, Oyin, let's start looking at the much smaller companies listing here, or at least having pre-IPO capital here and getting ready for a listing, putting that money in. They get all the governance checks, all the care, all the access to networks that could be fundamental to the growth of their business, both as a local business and internationally. And once you do that, then it then attracts the attention of a lot of the funds, the later stage funds on the continent, and in fact then would help to some of the sort of companies, particularly DFIs again, they're getting involved in secondaries, would start seeing that funnel come through, that hopefully then attracts more money to come through. But then you have proof of evidence for some of the pension funds, insurance funds that is sitting back and saying, well, these are small businesses that will never get anywhere. They're then starting to see the proof points come through where they're actually seeing in real time the potential growth of some of these companies. So that's where capital markets can be useful, both locally and internationally.
Okay, fantastic, thank you. So I'm going to try and quickly stitch a picture of what I've just heard here. So the first thing is, we probably need to shift the type of size of company we're looking at, 100 million, maybe smaller, more modest, or just more appropriate for each respective market. That also, we've got to look beyond tech if we're looking for actual returns. And what that's going to do is incentivize more local participants, as well as then hopefully put more money back into the ecosystem for development. And then the real question is at kind of that later stage is unlocking asset class type investors that are not currently participating and giving them the window from the pension funds and others as well. And if you're kind of looking to the listings piece, how is that kind of going to be in partnership with the local markets and not just kind of maybe seen as kind of everything's going offshore like you may have previously had with the pay stacks and everything. So I'm going to ask kind of a group, I'm going to make a statement and then I'd love the group to talk on it. Obviously, we see a large wave of companies offshoring early, HQs overseas, raising capital overseas. They have that exit point. They've exited in London or Delaware, wherever it might be. Is that value extraction, or is that just a necessity of going global right now? What does it look like right now? What needs to shift, or are we saying, actually, no, this is the best way for the ecosystem to work from that perspective? So Delaware and London, that's currently where a lot of companies come, but do we immediately need the Delaware and London, the continent? Do we already have somewhere like that? So what is people's take on that, the offshoring component? Is it a necessity right now, or is it something that can change?
I think that a lot of founders are told that it's a necessity. They're told that they have to have an offshore company. They have to put their IP somewhere safer, and in order to fundraise from the UK or the US, they have to have one of those entities. The question then becomes how many do actually succeed in raising capital from one of those markets. And I've seen a lot of founders spend a lot of time and money and governance, having to put governance structures in place to make these moves when it doesn't actually serve them to do it. Maybe it makes sense later, but not immediately. I think the other thing that I would like to say that kind of undertones some of the stuff that we're saying is a lot of the conversation is implying that we're talking about equity investing. And I think if we are talking more about real-world economy businesses, what they actually typically need is debt. They need working capital. They need the opportunity to kind of steal the language, your language, to prove themselves. They need things like guarantees or first loss capital so that they can actually demonstrate that their business models work. And they also need investors that understand FX volatility, that aren't going to force them to take dollars just before the Naira depreciates from 700 to 2,000. So yeah, there's a lot of understanding and a lot of, I think, alignment that needs to happen to the realities of the companies they're investing in and align to the kind of capital they actually need.
I think incorporating outside of Africa is a means to an end. I am incorporated in the UK, but that's because it's actually easier for me to do business with Africa from the UK than any African country. Our continent is, again, 54 countries, but we're not talking to each other. What that means is I have to move to the UK to be able to do business easier. That applies to my company, it applies to my passport, which is quite unfortunate. what that means is we have a lot of work to do on the ground, and that work has already started. Over the past, I think, 18 months, there's a lot of passporting agreement happening on the continent. So you have Rwanda with Ghana, I think Kenya and Rwanda. So Rwanda is kind of like in the middle of that passporting piece, which is very exciting. What that means is our continent will get smaller, just the way the EU did it. And now we can feel comfortable going to incorporate in Mauritius or in Rwanda or in Nigeria with Itana, right? The issue is the trust relationship between us and Africa is very weak. And we have to work on that. And kudos to many African governments going around and preaching the message of how good their country is. And Nigeria is a great example. Like over the past, I met a Nigerian politician this morning. I'm like, why did you reach out to me? And I got it. You know, Nigeria really wants to paint that message of a great place to do business. It is. Like, I've done most of my business in Nigeria, but the image out there is so negative and it prevents people. So the PR piece has started. The agreements are coming, and I think it's only a matter of time that many companies will slowly but gradually move back to incorporating in Africa.
Actually, I see as an enabler, and I like to say this to my African startups, which is incorporate in as many places as you can in terms of market. Because here we're talking only about capturing investment, but here I'm talking about market as well. Like, let me give you an example. We have a lot of 61 startups in Brazil. We tell them incorporate in the EU because it's an all new market for you. It's not only from a capital standpoint, because here we're only talking about capital, but we forget that a company incorporating a different country helps as well doing business in those countries, right? Even in Africa, right? We should incorporate in as many places in Africa as we can, but we should incorporate as well in the EU. We should incorporate as well in the UK, right? If that will open new markets, I think the startups should do that.
So if I bring that all together and come to the public market side of things, I was speaking to a founder earlier on, a couple of days ago, when we were talking about kind of exit journeys, and they were like, "Oh, well, we're not going to be able to go to New York or London. We're never going to list. You know, we're a locally based company." When we talk about being onshore or offshore, could maybe just for some of the earlier stage founders and operators in the room here, could you talk about the relationship AIM or the London markets have with exchanges on the continent? Is it just you have to come to London or New York to list or access public markets? Is it just capital in London? What's on the continent? How do international markets like London interact and relate to them?
Yeah, a lot of people think that, you know, you have to come to London as your primary listing, and that's that. What the London Stock Exchange has done is made it possible for dual listings to happen. Currently, there are 110 African companies listed on the exchange, and some of them are dual listed. I think, you know, for an early stage founder, and I was an early stage founder at some point before I got back into investment management, I think it depends on where you see your company going. I think the talk, particularly in tech, in African tech, has been grow the company to a certain size and then exit, you know, sell out. And I think that the narrative for funds should be very different narrative for founders. I think with founders, we shouldn't talk about exits. You know, for founders, we should talk about growth, because I don't want to invest in a company where they're thinking of IPOing and the founder says, thank you very much, takes their check and disappears. At that point, I wouldn't even invest. Now, do we want to be investing alongside PE and VC? No, I'd rather we got out, you know, they got out. We clean up the cap table with people understanding that there's long-term capital on capital markets going in. But I think that narrative needs to be different. So if you work out what your strategy is, do I want to be with this company for the next 20, 30 years? What do I see as a size? What's my vision for the size of this company? And what kind of capital from today would take me to get there? Do I want to be always chasing like VC pockets? If it's no, and you can chase money on capital markets, think about that. And if you think your vision is longer term for your company, think about what kind of structure you would need in your company today rather than later. Because a lot of founders think about it 5, 10 years in advance. And at that point, start building a network around that later stage capital and capital markets as well. Start talking to other founders you admire that have taken their companies to IPO and later stage and what that looks like. And I think what a lot of founders will find out, it's not such a long-term story as you think. With AIM, we invest in companies that have been incorporated 2-3 years. So it doesn't have to be a huge company, as I said. It could be 2 million revenue, could be 10, could be 15, could be 20. What AIM is good for is looking for those stories where the founders might not be where they want to be in terms of their growth journey, but they're willing, the investors on AIM, particularly at my stage where it's really early stage, we're looking to take them there. There's some investments in my portfolio that have been there for 18 years. And we've invested at different stages. At some point, we can't because it gets too big and they're no longer qualifying. But we go on that journey with them, and then we don't sell. And we're willing to be as helpful to companies and the exec team as possible over the years. So I think it's worth considering that journey, considering what that looks like to you if you want to go along with public markets. What stage would I feel comfortable going on that journey and building that network around you? But there are public markets like AIM, which is on the London Stock Exchange, that will look at much earlier stage companies.
And I think a really interesting point you've had there, and an observation of a lot of founders, is the moment you bring up the notion of IPO, it's like, oh, this is not a conversation for me. But actually, even if you're never getting to an IPO, 89% of that journey is growth, exit readiness at its best practice.
Yeah.
And you can work your way back from there, or you'll move your way up there, and you'll find your off-ramp if you're having an off-ramp, or growth ramp as well.
Yeah, absolutely. And yes, it might not be for you in the end, because we've invested in pre-IPO that have never IPO'd. But what they've done is grown, and you're absolutely right. Things like corporate governance, they've suddenly got the right board, or advisors if they don't want to take on the cost of a heavy board. But suddenly they're functioning better, and even the systems that then forces them to get in place, financial systems, is a lot better because of the transparency and scrutiny when you're a public business. But if you're thinking that way, it does instill a lot better practice than if you're just private and trying to sort of just get on with what you're doing.
Yeah, exactly. And it also becomes a bit of a shopping window for later stage institutional that might
Absolutely.
not usually look at things.
And even if you're thinking of a strategic exit, all of these things are considered when another company looks at you, or even PE. They will just look at how you run the business. Do you have all those systems in place? Do you have the right people supporting you? Are your revenue streams credible? Are they stable? Are they strong? So all of those practices, thinking about an IPO, will train your mind to then start getting the business ready to be seen, to be visible to a lot more strategic buyers or financial buyers.
Brilliant. Okay, so I think we've kind of covered some of the baseline there of the question that I'll ask. We've talked a little bit about the kind of type of company we want to be investing in, the stages, and how we unlock that capital. I'm going to give the chance for the audience to come in with a couple of questions in a second, but I've got my final question. Before I do, who here, just show of hands, in any shape or form, crowdfunding, angel investing, or as a fund is investing into startups or scale-ups, or has done in the past? Hands up. Okay, fantastic. And who here is building a company that wants to raise capital, or has raised capital, or raised capital in their lifetime? Hands up. Okay, so we pretty much sit on both sides of the fence. So this will be an interesting one to lean into. We've talked overall about the type of maybe asset class to invest in, the stages. I'm very interested, as all of you who invest or capacitate investments, what sectors or industry are you thinking are going to create the most of those 30 million companies, those potential IPOs or exits within the context of Africa? It might not be a tech company, but just to get your sense from where you work in the ecosystem, what sectors, or sections, or industry, or solution, or problem areas are you finding the most interesting right now that you're looking at for the next couple of years?
So on my side, it's some of the least sexy businesses, the businesses that are really providing those essential products and services. So it's agriculture, it's looking at the fact that 60% of the arable land is in Africa, that there is a food shortage, that there's this huge opportunity for us to feed the world, but also add value to our produce, to export it. And alongside that comes opportunities in logistics, supply chain, manufacturing. So that is an industry I'm interested in. Health is an...
Don't take them all up. You might steal them all off everybody else.
Okay. Let me just say one more. I mean, I am interested in AI. I mean, I've said no to tech, but I'm interested in it specifically when it's enabling real-world businesses. So, for example, there's a company I'm working with called Indigenous, and they do voice-to-voice translation for local languages embedded into telephony. So it's not the fact that it's AI, it's the fact that because of that technology, it enables businesses that rely on voice to sell with huge customer bases in various languages to actually access their customers.
Okay, so Ingenious, that's the one we need to invest in. That's really what I wanted to get to. Where am I putting my next $5,000?
Well, I'm biased coming from, I'm a musician, so creative industries. I'm super excited about what's happening on the continent in terms of creators and all that. And I think the big companies will come from there, because a lot of these companies on the continent, they're not part of this VC conversation, but they have markets on the continent, right? Record labels, musicians, and so on. So I'm really looking forward at looking deeper in creative industries and see more companies coming out of the continent from those industries. And I guess I'm biased with that, but I guess not a lot of people are looking at that, and that makes me very excited about it.
Have you got one we should be looking at?
Not yet. We're looking, we're building a pipeline. Ask me that question in 1 year time.
Okay,
all right?
One to watch.
Yes. 3 months. My brother is even more
3
optimistic
months, okay.
than me.
Keep an eye on his LinkedIn account.
He's the investor of the company, so if he says 3 months, I go with 2 months.
June 2026, watch their LinkedIn account.
I think they stole what I wanted to say. But I want to double down on the creative industry piece, because the term I use is Africans are the curator of culture. And we've been doing that for a very long time. And these days, like food, entertainment, the music, the clothing, we're right behind it. And when you saw what happened with Don Jazzy's label, I think 18 months ago, surprisingly, nobody's talking about it. That was a $200 million exit, but everybody's stuck on the other one. We're all, like, I hope we're not sleeping at the wheel, because if we're not careful, again, everybody else is going to invest in these industries apart from Africans. The good news is, this is where I plug myself. Right now, we are helping a company which produces cartoons to raise for a specific IP on our platform. That's very exciting. And they're raising $500,000, and they already have, again, we're more of a technology platform that helps organize. And it's so exciting to see more and more people wanting to fund cultural assets. And I'm not using company, I'm using assets, because these are oftentimes cash-generating assets. And when you look at what's happening with Nollywood, somebody told me, hey, go watch this producer on YouTube. And she has 3 million followers on YouTube. Her videos have 20 million views. I'm like, who's this person? I've never heard of you. And so I started researching, like, hey, how do I get in touch with this person? So I think we should all realize that we've been curating culture for a very long time, and we need to put our dollars, pounds, euro behind it.
Amazing. You invest together. We'll all invest together. We'll all invest together.
I have to agree with these two gentlemen about the creative sector. I'm biased, obviously, because I'm an art collector, but I think there is so much potential in the creative sector in Africa. We just don't have the ecosystems to support and infrastructure to support actually what's possible. Even building things like concert spaces is just not there. We have a lot of musicians on the ground. I was in Kenya at the beginning of the year. There are a lot of musicians on the ground. They've just got nowhere to showcase what they do. So they do concerts here. They do concerts in the US. And, you know, we've seen Nigerian artists fill up Madison Square Gardens. Why don't we have those kind of facilities on the continent? I get their economic dynamics that need to be sorted out. But I think we should have those spaces, because I don't think we take enough advantage of cultural tourism. So the creative sector can bring in a lot of money. In terms of other sectors, healthcare, I have to agree with you. I think we need to start looking at the healthcare sector in Africa. I think there's a lot of opportunity there, whether it's, you know, it's diagnostics, just general biotech. I think there are opportunities. We've got the space. We've even got the products, because there is no plant that's not grown in Africa. A lot of this testing, I think, you know, we could build out really first-class healthcare facilities in Africa, and we're just not taking advantage of that.
Okay, so they're the insights. And I actually, just on the creative piece, the sports side of things is what I'm particularly interested in. I mean, a great case would be the NBA have put a lot of presence on the continent. But what was interesting, they were in, to your point about the multi-layered infrastructure we need. I was reading the other day in a conversation that the NBA are looking at an infrastructure fund so they can start building facilities on the continent and not just investing in the players. Cape Town's had a couple famous tech VCs and founders have revitalized Cape Town Tigers. So there's also the kind of, we have the Wrexham Club Netflix kind of show with African founders and funds supporting these organizations. So, okay, really interesting, thank you. Got about 3-4 minutes, I'm getting a nod. One or two questions from the audience for our panelists. Oh, hand straight up at the back.
Thank you. Thank you to the whole panel for such an interesting discussion. My question is for Oyin, first off. You mentioned that often African startups and scale-ups require private credit or debt financing rather than equity. And we know that LPs are attracted to that for a number of reasons, the kind of consistent distributions or asset-heavy companies where you can use those assets as collateral. But we're also seeing that in the global market, there are jitters around private credit. I think those reasons are removed from the continent, but to what extent are you hearing, if at all, the contagion spreading? Is that affecting the African ecosystem, or is private credit holding up? Thank you.
Yeah, sure. So I think if we're looking at global private credit, we're dealing with additional challenges that make it, I think, that make the contagion a challenge. So FX volatility is really, really real. I've worked with companies that have taken debt in sterling or dollars, currency falls, and they just can't pay that debt back. And I think in the ideal situation, that debt provider would perhaps have some understanding for a delayed payment, for example, but they don't yet have the ability, well, often they haven't yet done that. So I've had founders that have said they have tried to negotiate with their private credit provider to just say, can we pay this money in 15 days rather than immediately, because suddenly our cash cycles have changed and we literally do not have the cash to pay that back. And they haven't been forgiving. So I think it is going to be more of a challenge, but I think there are more opportunities opening for private credit in local currency. And that is part of the work that I'm doing with Cascador, where we're actually working with Sterling Bank, for example, to provide a first loss guarantee. So we're essentially saying to that debt provider, we trust this company. If anything goes wrong, we will back you for the first X amount of pounds, naira, dollars, whatever it is. And that gives them some kind of reassurance that they will probably get their capital back, if not from the company, but then from us. I hope that helps.
Okay, we'll go to our other gentleman at the back.
Good afternoon, and thanks to the panel. I think you all, where I'm speaking, I think what I've noticed, Oyin, you were talking about the currency volatility. We're talking about, Joe, you were talking about the exit by investors and things like that. I want to believe, or maybe you guys can actually answer this question, does it have like an undertone to the political instability, or maybe like that semblance of instability within the region? Because again, like the tax regime, again, countries use like CGT to, stop, capital flow or capital exit. But again, you need to find the balance between protectionism and obviously like trying to encourage, capital flow. But one particular question I would like to ask, Freda mentioned about, companies, the revenue, like making revenue of 2 million and things like that. And it goes back to the model that Facebook built over the years. And if I remember rightly, I think it was only 5 years ago that they started putting pressure on, investors started putting pressure on Facebook to commercialize or, monetize the platform. So in a case where people build platform like that, and obviously like VCs tend to want monies now, how do you kind of like find that balance between people that are building that Facebook model where maybe revenue will start to generate at a latter scale?
That's a very loaded question. I'll answer that part, the second part first, which is there's a serious lack of patient capital on the continent. Like, you have Sequoia, A16Z, they've got deep pockets, they've got billions, and they can sustain Facebook for a very long time. I think the largest fund that was raised in Africa, VC, Partech, 300 million? Yeah, right. That's like, if you see the announcement today of how much OpenAI raised, 122 billion. That's 10 times the GDP of Togo, where I'm from. So we don't have, and they've been loss-making.
That's over nearly 5x the total venture capital raised across Africa, period, right?
Yes. It's mind-blowing. So we don't have access to the level of patient capital that's required. So what that forces a lot of us to do is be cash flow positive as quickly as possible, so that as you're investing more money into innovation, your company doesn't die. So that's how we have to square the circle. And the other part about political instability, I wanted to ask you, are you seeing what's happening in the US? I think, if anything, right now, Africa is the most stable place to go to, because the world is in absolute turmoil. Yes, our past hasn't been great, our present is brighter, and our future is going to be amazing. So while, yeah, like, you know, we've had rough patches, but like, I go around and I speak to African politicians, I'm like, wow, like, where are you guys, where are you hiding? They're doing a lot of work, and oftentimes they have their heads down and they're not doing the PR around all that work. And that's why Wimbart is here, to make sure that they get the visibility and they can amplify the great work that a lot of African countries are doing. I think I saw in Web Summit is going to Cape Verde. Well, I just want to say I'm very excited about that. I don't know whether that's true or not, but yeah, I think, if anything, the greatest risk right now is for people, like, you need to invest on a continent, because everywhere else is in an absolute turmoil.
And on that bombshell, we're about to be played off with our Oscar music. So I just want to say thank you very much to all the panelists for your contribution. Thank you for your questions, and enjoy the rest of your afternoon. Thank you.